Let Vishy tell them about it. But it is on a much touted stake sale over a long period of time. But we learn now that IDBI Bank stake sale is all set to enter the next leg, as sources tell your channel that KPMG may be submitting the closing due diligence or diligence soon. Vishwanath Nair joins us now with the details. Vishy, tell us, what are you gathering from your sources?
Right, Neeraj. So much touted and long delayed is probably the appropriate sort of tag for IDBI Bank. But, over 2 years since the EOIs have come in, so now finally IDBI Bank seems to be entering the next phase of this entire transaction, where KPMG, which is the process advisor to IDBI Bank and the government for the stake sale, is likely to close out their closing diligence in a few weeks. That is what our sources are telling us. Essentially, the closing diligence is this. It's been a long time since the bidders had a chance to look at the financials of IDBI Bank. So now they need to know what is the current position, and that's what the closing diligence intends to do. It will tell the bidders if their initial estimates, initial assessments of IDBI Bank's financial position still hold true, if anything has changed on ground or not. Once this closing diligence is completed, the bidders will then have about 4 to 6 weeks to submit a financial bid for IDBI Bank. Remember that 3 bidders, which includes Fairfax Financial, Kotak Mahindra Bank, and Emirates NBD, all 3 of them were in the race for IDBI Bank. That is what we had reported in the past. What's also telling us is that in the past few months, things have gone a little bit more silent on the IDBI Bank stake sale front. The bidders haven't indicated whether they will actually submit a financial bid or not. That will become clearer around March and April when the financial bids are expected to come in. Even if somebody actually comes out and bids for IDBI Bank, by the time the process closes out, it will be the middle of FY26. So the transaction was expected to be completed by March, so that FY25 is the year when IDBI Bank finally gets sold. It will likely get pushed to the next financial year. The delays are a problem. Having said that, the process seems to be moving finally after a long wait.
Certainly, IDBI Bank should be on your radar. Vishy, before you step off, I just want to ask, and this is not something we discussed, of course, but we should be talking about it, the liquidity scenario, which has been a little bit tight in the recent past, and the announcement of VRR auctions that will come into play today. Of course, the liquidity deficit as of the 14th standing at over 2 lakh crore rupees. The RBI is stepping in to stem some of that. What is the impact for the banks if you're talking about the latest action by the RBI?
So 2.5 lakh crore, that's the number, Alex, on the liquidity deficit side. So obviously the regulator has to step in because this is a tight liquidity scenario. Plus next week, you're likely to see some GST payments coming through. So more liquidity will move out of the system into the government's account. So that is something that they are worried about. They're starting a daily VRR auction cycle. Starting today, every single day of the week, Monday to Friday, there will be a VRR auction. The amounts will be decided depending on the situation of the day. But once the auction is done, then the following day, this auction will be unwound. That is a plan that the RBI has implemented. VRR auctions themselves have are proving to be a little bit of a failed measure or not such an efficient measure for liquidity management currently. Banks are saying that there is no durable liquidity in the system. The RBI comes in, it gives you a little bit of liquidity for a few days and then it takes it back. So that doesn't solve the core issue of a tight liquidity scenario. We saw day before yesterday when the RBI did its 50,000 crore VRR auction, 5-day auction. Yesterday when that auction actually took place, not many banks actually came in to take that liquidity because they believe that this is not enough for the system. They're expecting, banks have been pushing for an OMO process which will bring in slightly longer term, more durable sort of liquidity in the system. Remember that the problem is that the current system is not able to grow its loan growth, primarily because deposit growth had not caught up with the loan growth. That problem seems to have resolved itself, but liquidity crunch, that seems to be still continuing, and therefore future loan growth suffers for banks, and that is why they're expecting the RBI to come in with slightly more durable liquidity measures which will help, of course, the banking system.